This is the MFG Monkey Podcast. We sit down with leaders and innovators in the industry to talk about manufacturing, business, and the stories behind their successes. I'm your host, Dustin McMillan, owner and founder of McMillan Co. Jason, welcome. How you doing, buddy?
Thanks, Dustin. Good. How are you?
Yeah, I'm doing really well. They're gearing up for Memorial Day weekend, and we're excited about it. Spend some time on the water and
Yep.
Probably drink a couple too many beers and
Yeah.
have a good weekend. So
I think I'll be doing the same. Actually, we're heading up to a lake in Northern California for the weekend. We have my wife's friend and her family from college have a place up there, so we're driving up there. It's about a 7-hour drive, and we'll be hopefully doing the same thing you're doing.
awesome. What lake is that?
Lake Tulloch. It's
Tulloch.
just
Okay.
just southeast of Sacramento area.
Okay, cool. Yeah, I haven't
Yeah.
heard of that. And where are you at right now?
I'm in San Diego.
Yeah,
Yeah, so it's
beautiful area.
I think it's going to be about a 7-hour drive for us. So we'll get up nice and early in the morning and head over there.
Yeah, very good. I spent fair amount of time in California in San Clemente,
Yeah.
10 plus years ago, and loved it out there. San
Yep.
Clemente was really awesome. There were parts that I wasn't too fond of, but
Yeah.
that's another discussion for another day.
Yeah.
And
Yeah.
the
San
fun
Clemente is
part
great.
is, yeah, and the fun part is we're talking taxes with with somebody living in California, so that's always an interesting topic that my buddies that run manufacturing facilities in California, it's a sore subject. So
Yep.
maybe
Exactly.
we can help some Californians out with tax discussions
Yeah.
today.
Absolutely. And just for clarity, I do know enough to be dangerous on the tax side of things. Our focus and my background is more on the accounting side.
Right.
That is really on that CFO leadership, the accounting leadership, making sure the businesses have good numbers, good reporting, so they can drive decision making for their business as well. So, but happy to
Yeah.
go any direction. Like I said, I
Yeah.
know enough to be dangerous on the tax side too.
well, we'll leave that alone. But the accounting piece has always been very, very interesting to me. And, outside of manufacturing good product, the accounting piece is probably the number one most important thing any business can pay attention to
Yep.
and have full focus on and understand their numbers every day. And I'm excited about our discussion today, quite honestly.
Yeah.
And I was even more excited reading your bio that you're kind of a badass. So let's touch base on that. Like that doesn't make it in everyone's bio.
Yeah, I think it's so that you'll notice me maybe and want to talk to me. But
Yep.
the reality is, I've had my background. I've had quite a bit of experience in obviously in the finance world. I started my career in public accounting. Spent most of that with Deloitte, which is one of the big four global accounting firms. So I've had a lot of experience just seeing all types of companies, different types of industries, all stages of life cycles, right? And when especially when you come into manufacturing, when you talked about the numbers and the accounting, manufacturing, and when we see in small, mid-sized manufacturing companies, inventory seems a lot of times it's a black hole, right? And understanding your true profitability, your true margin is always a challenge. And so what we like to say is, hey, not only do you want to understand your margin, you want to understand your margin by product line, and you don't want to be guessing that, hey, maybe my margin is 50% or maybe it's 40%. Well, is it 40 or 50? We want to know to the percentage point, because as you grow, that percentage point changes. That percentage point, 1 or 2%, can make a significant difference on your cash flow, your profitability, how much you pay yourself, those types of things. So I'm excited to talk about any value I can give to the listeners. We've seen a lot as a company. I've seen a lot personally, and love to provide any value we can.
Yeah, no, I love it. It is very interesting to understand your profitability, and not all systems are created equally there.
Right.
And it blows my mind that there are systems out there that won't track labor rates and won't track actual cost of goods and things like that. And I, you know, we're using a system right now that won't allow us to track a labor rate,
Yep.
and it's on our short list of things to invest in, to
Yep.
move to a system that will allow us to track labor rates by work center. Um,
Yeah.
and I don't understand how somebody could create a system and not track labor rate.
Yeah. I mean, the reality is, if you're using, the least expensive systems and softwares are great. Um, for most businesses. For manufacturing, they're tough. And so, QuickBooks, we highly recommend QuickBooks for a lot of our clients. But when you're in manufacturing, QuickBooks is not really made to track inventory, to track, uh, labor rates, costs,
Hmm.
in the manner that, in the complex, in any level of complexity. And so
Right.
there's a number of systems that, there's a number of bolt-on softwares out there that will do that, and then now you have two systems. And so then the challenge comes if you got to learn how to use the new system, and then not only do you have to use it effectively, you have to be able to integrate it effectively within a QuickBooks platform, so that
Yeah.
ultimately you're getting the good numbers, right? And so that adds complexity that, for businesses that are growing, they're smaller, they're growing, they want to grow, they're, let's say they're, going, if once you get beyond 10 million, that adds a lot of complexity, and it's challenging. And
Hmm.
what we see a lot of times is, even though they may set it up and it may be tracking inventory and cost of goods, it's not necessarily tracking it uh, accurately, and so you end up with numbers that don't really reflect reality, and you may not even know it, because inventory can be a black hole, and the byproduct of inventory, what comes out of inventory, ends up being your cost of goods sold. So if your inventory is not accurate, your cost of goods sold are not accurate, your profitability is not accurate, your margins, nothing's that, so how do you really run your business without that clarity? And that's a big challenge for manufacturing companies as they're smaller and scaling and want to grow.
Yeah. and and it is, and the good tools are extremely expensive. There's
Right.
and the one that we've used for a number of years, and it's certainly not the best, and we want to get away from it, and we won't talk about who they are, because I don't
Yeah.
want to bash them.
Yeah.
But
And like
they,
I said, I mentioned QuickBooks because we highly recommend it, but
yeah.
it's just not built for more complexity, especially from a manufacturing perspective.
Yeah.
And they actually have partners that they recommend,
Hmm.
for that piece, for inventory management, that will
Yep.
integrate within their system. So
Yeah, and we use QuickBooks, and I do think QuickBooks is great for what it is, and we use a another system that or supposed to integrate with QuickBooks,
yep.
uh, but it doesn't,
Right.
and there's rounding errors, and for invoicing and things like that, it messes QuickBooks up, so we ended up turning it off. So then we're
Right.
double entering everything, so it's yeah. What system outside of QuickBooks would you recommend to folks that are, you know, small to medium size, or would you?
Yeah. There's a number of systems. As companies grow. I actually like NetSuite. That's a fully functioning ERP system. Now that starts to get more expensive, right?
Yeah, yep. We've looked
There's
at them, and they are crazy expensive.
Yeah, so you have to be, well above 10 million annual revenues to want to entertain that.
Hmm.
Um, Sage Intact, I've seen, um, is is a pretty good system. um, what else? So Sage has all different types of products, all different types of industries. They're a business because they've acquired a number of different softwares. So, but they do have a pretty solid um, system. Um, that's, I think, the challenge is, the next phase of beyond QuickBooks is very expensive, right?
Yeah.
And so the best bet, like where you were saying, is to leverage something like a QuickBooks with a tool that can track inventory. And there's a number of them out there. And I can probably after this call, I can probably send you, and you can send your listeners probably what I would consider maybe top five
Okay. Yeah, we'll do that.
that we've seen. So maybe we'll do something like that. Yeah.
Yeah, for sure. Well, and to make sure that we do stay on track, because I have a tendency to squirrel out of control and we'll go down a black hole. You did send me some topics that you wanted to make sure that we talk about. So let's talk about those real quick. How to weatherproof your business for a possible recession. Great
Yeah.
topic. What nonprofits need to know to breeze through annual audits. We talked about that, nonprofits briefly. I think that it's a great topic, even though we're a manufacturing podcast. There's so many manufacturers or warehousing distributors that have interest in giving back as well. So I think that's absolutely a great topic. How to get your month end closed quickly. That's a good one. Accurately and with insights you can use. That's,
Mm.
we've struggled with that in years past. I feel like we have our arms around that one, but what a great subject. What makes an efficient accounting process and how to tell if yours is working.
Yep.
Is your business really profitable? Great. You think it is, right?
Yeah.
You bid a piece of work, you win it. Your spreadsheet tells you, or whatever quoting tool that you're using tells you that you should be profitable, but are you really?
Yep.
And then fraud, how to see it, how to prevent it, and what to do if you find it.
Yeah.
We get, I don't even know how many phishing emails a day that if you click on the wrong email, you're hosed.
Yep.
And years ago, I worked for a company that somebody clicked on something and they had ransomware, and it cost a tremendous amount of money to hopefully get all their data back.
Yep.
And I don't even know if they got it all back. So,
Yeah.
insurance is great for that, but if you lose it, you lose it. I mean, what's insurance going to do?
Right. Yeah. I mean, the insurance it gives you some sort of a bridge, but I mean,
Yeah.
you also can lose credibility with your clients.
Yep.
Cash flow is critical. You're not going to get your insurance isn't going to fund you the next day.
Yeah.
So yeah, I mean
Yeah.
that we've seen that as well. We haven't had that issue with any of our clients that we work with, but we've been in situations where it happened, before we got there, right? And that's part of
Yeah.
why we got brought in is because they realized, hey, we don't have the controls in place to ensure that this isn't going to happen again. Um,
Right.
and why is it happening? And so in the so they get locked down in some cases. So there's, then you get into the IT infrastructure and the training of your team. We've seen
Yep.
others where, it's fraudulent, phishing from a third party that will, go directly to the head of finance or the CFO or the controller. And it appears to be an email from the CEO. And they say, hey, I want to transfer, 50 grand. We need to pay off this vendor. Can you transfer the funds to this bank account? And it's fraudulent, it's fake, right? And so they transfer the funds, and then the funds are gone. And so we've come in after that fact, and that's a control issue where there wasn't the right communications to ensure that an approval process to ensure that something like that doesn't happen. We've seen that
Yeah.
before. And then other issues with fraud happen internally. You have any company that has one person doing the accounting and has total control. I mean, that's ripe for that individual to be stealing from the company. I mean, if it's just so easy if they have total control, and the business owner, the executive team is just thinking, oh yeah, this person handles accounting, I don't have to worry about that. I'm going to do all this stuff over here. With no oversight, no control over what that person does. I mean, we've seen situations where the person they have control of payroll too, so they gave themselves a raise, right? Or they create a dummy vendor account and they can pay themselves through that. So a lot of those things are very easy to do and probably happen more often than we want to believe. Probably happening to some listeners here,
Yep.
and those are also fairly easy to prevent. if you have the right, structure in place to prevent that.
Yeah. And I remember probably 4 years ago, one of our sales folks clicked on an email, and whatever he clicked on gave all of our um, customer list to, whoever overseas,
Oh, wow.
and they sent our entire AR um, database a change of remit form
Wow.
to go to a different account. And we, a lot of our customers pay us in, ACH now.
Yeah.
And luckily, one of our customers called us and they're like, do you really want us to change your account to whatever? And I forget where it was,
Yeah.
Bangladesh or something. I mean, it was so
Yeah.
obvious that,
Yeah.
the customers were like, do you really want us to do this?
Yeah.
And obviously we got our arms around it very quickly, and we were able to call all of our customers and say, hey, this is a fake email.
Yeah.
Don't don't send our money to Bangladesh.
Right.
So, but it was scary. I mean, I was, my heart rate was probably 200, because it would, something like that would sink a
Right.
company if
Yeah.
all of your ARs going offshore somewhere.
Right. And then, it comes back to, okay, well, whose fault is that? You could say, well, the customer still owes you money. I don't care if they paid someone else, they still owe you money, right? Or
Right.
and then the customer is going to say, well, we got something that looked like it came from you that said that we need to pay this. So then you get in arguments with your customers over, do they still owe you those funds or not, even though they lost,
Yeah.
so who loses on that? And it's a tough situation.
Yeah. No, and luckily it really didn't affect us. It took a lot of our time, but that was about it. But then,
Yeah.
we immediately uh implemented different things through our IT that, those types of emails would be sent out to people. And if they clicked on it, they got, sent to detention, and they had to do like 7 hours of training, and
Yep.
and just to make everyone aware. And we still do it today. I get them. And luckily I haven't been sent to detention yet, but
Yeah.
I mean,
That's
some
good.
of them they really look real. And we've
Right.
had fake purchase orders come in. um you bid a certain piece of whatever business, and they send you a purchase order, and there could be a dash in the email instead of a, where it should be a dot or whatever. And, we end up looking the company up, or getting on the LinkedIn and looking that person up. And it's like, we had one come in that we were excited to win this business.
Yeah.
And my office manager comes to me and she's like, Dustin, I looked this guy up on LinkedIn, and he's the CEO of this company. And it, came in that he was the purchasing agent. And
Okay.
I'm like, well, the CEO of this company is definitely not sending us, as a multi-billion-dollar company, definitely
Right.
not sending purchase orders out. So,
Yep.
just paying attention to those tiny little details in the URL or email address
Yep.
it's imperative.
Exactly.
You buy something or make something for, a company, and send $100,000 of product off, and you never see it again.
Yep.
You're never going to get paid.
Absolutely. Yeah.
Yeah. We had 2 years ago, we had somebody intersect a shipment of tape. It was like an entire um what was it? It was an entire semi truck full of tape. It was a tape manufacturer. I don't know who it was. I can't remember. But somehow they intercepted the um the truck, sent it to our facility, and they were trying to set an account up for us to warehouse this stuff and send it somewhere else. So we get all this tape in, and again, uh, Ashley does some digging because she feels weird about it, just
Yeah.
has a bad gut feeling, digs into it, and it was somebody offshore that somehow intercepted this truck and stole an entire truckload of tape.
Wow. And end
And
up in your
we
warehouse.
and it ended up in our warehouse, and we ended up reaching out to the company, and they're like, no, we definitely didn't do that. So we just they sent a new truck in and
Yeah.
picked it
Like, you
up,
want
and
your
we sent
tape
it back
back?
to
Yeah.
them. Yeah. But I mean, it had to be hundreds of thousands of dollars of tape. I
Oh
mean,
my gosh.
it was wild. So
Yeah.
yeah,
That's crazy.
it's it, I it's amazing to me, the people that spend the energy to do things fraudulent. If they actually spent that energy in a legitimate way, they would
Yeah.
crush it. I mean,
I know.
I think it's so much harder to make a living fraudulently,
Yeah,
I guess. But
yeah. I don't even know. Yeah, it's I don't obviously I don't personally know anyone that does that. So it's like you don't even know what their uh,
right.
what type of individuals you're dealing with. They're just kind of uh, in the dark, So
Yeah. Yeah. And we just set up an Amazon seller account for one of our customers, and probably 15 years ago I had a company and we sold some product on Amazon, and that company is no longer around. Um, but the hoops that we had to jump through to set an Amazon account up was crazy. Just because there's got to be so much fraud on Amazon.
oh, I'm
I
sure.
mean,
Yeah,
so it was interesting to me. It took like a week to set up a seller's account.
yeah,
They wanted, it was wild.
yeah. I mean, their margins have got to be so thin because I always look at things from a financial mind, right? So I'm like, okay, well,
Hmm.
we just ordered one thing and it wasn't very expensive, and it came in this massive like cardboard box, so like, how much is this whole huge box for this one thing
Right.
that's not expensive, and then they shipped it here, and it's the item probably costs $10 or less, and it's like, how do they even make money? So, but they
Yeah.
they, they do so much volume that they can make money, but the seller of that product, I mean, I don't know, their margins are pretty thin too, and so we have clients that sell on Amazon, and Amazon definitely gets their share, and so it
Oh yeah.
really impacts your margin as a
Yeah.
seller on Amazon. Um, it's a whole new beast to do that.
Yeah. And I mean, Jeff Bezos isn't building another multi-million dollar mega yacht because he's not making money.
Right,
Um, so definitely the volume, and it's, that story is incredible to me, whether you like Amazon or hate Amazon.
right.
That guy, what he created is just unbelievable.
Yeah, it was an online bookstore, right?
Yeah.
That's where he
Online
started.
bookstore, and
Yeah,
his desk was an old door. Um, I don't know. It's just a cool story. I mean,
yeah,
it's the all American, dream
yeah,
to
yeah.
create a business like that.
Really first real internet business. And the question at the time was, can internet based businesses be profitable? And they
Right.
didn't have profitability for a while. And the amazing thing is that he actually has led that from the beginning. A lot of companies that get to where they are, or that really grow, the leader, the founder has the sophistication and the insight to get to a certain point, and then you bring in the hired guns, right, to
Hmm.
expand it and grow it even further. But you look at things like Microsoft with Bill Gates, Tesla with and Elon Musk, and I think he was with PayPal before that.
Yep.
Um, these guys are, they're one of a kind, obviously, and the ability to take it and then not want to even exit, right? I mean, they want to continue working 60, 70, 80 hours a week, even though they're billionaires. That's their
Hmm.
passion. That's what they want to do. Whereas a lot of us normal people would be like, hey, you know what? I'm good with a couple hundred million. I think I'm just going to sell it and
Yeah.
retire and move on. These guys, that's their passion. They want to keep doing that, and that's what they do. So,
Yeah. Yeah. I mean, that's my jam is I want to hire myself out of a position, right? I mean,
right.
that's
Yeah.
my dream is to build something and hire a team that it can go on without me, and it doesn't need me.
Right.
Um, and I mean, that's my goal. I, 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 I don't know. We talk about that all the time. People working 60, 70 hours a week. And it's like, it's an addiction, I think. And at one
Yeah.
point in my life, I definitely worked like that. But the older I get, my goal is to work as little as possible.
Right.
And I share that with everyone. And
Right.
it's, and if, to be on our team, if you're not okay with that, then you're probably, it's probably not the place for you.
Yeah.
And, um, and I would invite anyone that works for me that if I can help them do the same thing, I'll absolutely help them, do the same thing. And that should be everyone's goal, I think, is to build something that you can enjoy your life and not work your life away.
Yeah. Yeah. I mean, I think for us, it's we have about 75 full-time employees, and what's important is that they're able to get the experience to grow their career with us, right? But
Hmm.
at the same time, we also know that everybody has a life. And so there's always that
Yep.
balancing act between, we want people that are hardworking, passionate about what they do. They want to grow their career. They're not satisfied just doing the same thing all the time.
Yep.
And they work hard, and sometimes they put in some extra hours. But at the same time, giving them the flexibility, building that culture within an organization is critical
Yeah.
for long-term success of the company, and also for the individuals that are involved, right? Because
Yeah.
everybody has different passions, everybody has different interests, and so it's interesting and very challenging to build a strong culture within an organization with so many different people from different places and different
Oh yeah.
personalities and types of people. So
Yep. Let's go back to weatherproofing for a possible recession. I mean,
yeah,
so many companies went out of business during COVID, and before that it was 2008. I mean, massive recession, and the companies that make it through those are truly sustainable, I feel. But you never really, like, we didn't prepare for it. I didn't even think about preparing for
yeah,
anything like COVID.
yeah.
It's definitely an interesting conversation, and in this environment, who knows? I mean, we could be headed towards another recession. I don't want to be negative, but it's going to happen at some point, right?
Yeah, and that's the interesting thing is, a year ago, everyone said, okay, well, we're definitely going to be having a recession in the second or third
Right.
quarter of 2023. And then it's, or, even before that, it was going to be the first quarter of 2023. Then it got pushed and it got pushed. And it's like, okay, are we going to have a recession? So there's a lot of just kind of uncertainty in the market, and there still is this year.
Mm-hmm.
With interest rates, now it's the big thing of the day is, interest rates. Everyone says interest rates are going to go down, 5 times this year, 4, 5, 6 times, and now we're in May, and it doesn't look like at the earliest it'll be September, October, right, for it to go down at all. So there's
Right.
just, you never really know. There's a lot of uncertainty. Nobody can really predict for sure what's going to happen. When it comes to protecting yourself, in a recession, there's two things. One is obviously know your numbers, because how do you make decisions if you don't really know what's happening with your numbers and your business?
Right.
And that goes to not only profitability, your expenses, your expense structure, but then ultimately cash flow. And cash is king, right? So it cash flow is different than net income, than profitability, and especially in a manufacturing business, more so than others, because in manufacturing you gotta buy your product, so you gotta cash out the door, and then you gotta manufacture the product, and then you gotta sell the product, and then you finally get paid for the product, right? In some cases,
Right.
maybe depending on your customers, maybe you're getting paid up front to cover the cost of the product costs. In others, you aren't. And so the reality is your inventory is cash on the shelf, right? So managing your inventory levels is critical. I still remember this. I had a great conversation with a potential client. This is a number of years ago, and he says, "Hey," he pulls out his P&L. I think they were QuickBooks, and he says, "Hey, look at this." He says, "Look how profitable we are, but I have we have no cash. Like, I can't even pay my bills. But if I look at
Right.
this, we're so profitable." And I said, "Okay, well, there's one of two things. One, your numbers aren't accurate. You really aren't that profitable, and that was a high likelihood, because I don't think they were tracking inventory very well and all that kind of stuff. The other is, your cash is hung up in your AR and your inventory. So you may be profitable, but if you're not collecting your AR, then you don't have cash, right? And if you're not,
Right.
if you have too much inventory, that inventory is cash on the shelf. So managing inventory levels is critical. And it was very difficult during the COVID time period when the supply chain was disrupted. So
Yep.
being lean on your inventory is critical. Not too lean, because you obviously want to be able to take advantage of opportunities, but managing inventory and really understanding that is critical. So that's number one. Number two is always have a strong relationship with your bank. If we ask you who your banker is and you say, well, it's so and so, at the branch when I go, make deposits, or when I, go to the branch for some reason, that's not a true banker. Especially when you talk about manufacturing, lines of credits, any other types of financing. You may not need financing now, but the best time to build that relationship and get some level of financing in place, like a line of credit or an extension on maximizing the amount of the line that you have availability for, is when your business is doing well. If you wait until there is a recession and your business declines, it's going to be very difficult to get financing, to get a line of credit. So get that line of credit in place now. If you have a $2 million line, see if you can make it 3 or 4 right now. There's not much additional cost to do that, but it gives you that flexibility that if things do go south a little bit, you have more cash flexibility. Again, you're not going to get that if things go south and then you go to the bank. They're not going to give it to you. So let's work on it now.
Right.
And then the other piece is really understand your expense structure. We talked about accounting systems. We talked about ERP, software. Software expenses are a black hole. Everyone invests in software and they realize, well, I'm paying all these software costs and technology costs that I'm not even using or getting value out of. And so evaluating, hey, am I really using this? Evaluating each of the expenses of your business. Am I really, is this expense driving value to my business, and driving me towards the goals that I have for my business? We may have hired somebody, you may have hired somebody 2 years ago to drive something forward within your business, to achieve a certain initiative that you had, and maybe that initiative is fizzled out and it didn't come to fruition, and that person is still there. Well, do they really need to be a part of the team? Some of those are difficult questions. You don't want to just be letting people go left and right, but make sure that every individual within the team really is driving value to the organization and driving you towards achieving the goals that you have in the future. So taking a hard look at that. And the reality is, it's hard to understand any of that if you don't have good solid numbers that you can trust. And so that goes back to some of these other things, is make sure you can close your books. Let's get good numbers you can trust. And then ultimately, do you have some level of a forecast? Can you forecast out your business over the next 6 to 12 months? Do you have a budget? All of those things will help you in being able to make better decisions as you look forward in the business, versus just saying, okay, yeah, well, here's my numbers. Great. We did good. We did bad. Okay, let's keep moving forward. If that's the mindset, if something does happen in the economy, you're at the whim of, who knows, right? And that's a scary point to be.
Yeah. No, those are all good points, and there probably are quite a few people out there that end up needing a line of credit and they go try and get it, and then they get shut down, and then
the other thing with the line, I'll go back to that, is the bank looks for, the first thing they're going to observe is, how credible is this company? How credible is the owner, the executive team I'm lending to? And they see that through when you give them the numbers. So if the bank is asking from financials and you just hit print on QuickBooks and you send it off, you're at the whim of them evaluating your whole business through what you just gave them. And you may be providing them with too much information. You're providing them in a manner that is not credible, or doesn't look very sophisticated. Well, they start to make those judgments, and that then ultimately determines the risk that they put on you as a potential customer. The more packaged you are, the better, more sophisticated you can present yourself, the lower risk the bank will see you as, and you have a better opportunity to get funding. Banks have their own metrics, but banks, they can make decisions. They can take on more risk if they want to, and they will do that with companies that they see are credible, have higher level of sophistication, and have a true understanding of what their numbers are and their business.
Yeah, and I that's just such a wonderful point, and we were fortunate enough that I had a colleague that I was talking through these things with, and he's like, Dustin, you got to tell your story. You can't
Mhm.
just send your P&L and your
Exactly.
balance sheet
Yeah.
to the banker and expect to get financed. You
Yep.
have to tell your story, and we we were very fortunate to have that conversation before I ever went to the bank, and we had a binder, and we invited our banker into our facility, walked them. They met our employees.
Yep.
We had, I mean, it was a 2-inch binder of everything
Yep.
that we felt that would put us in the best position with the bank.
Absolutely.
And the banker sat down. He goes, I've never seen anything like this.
Yeah.
And I'm like, is that good or bad?
Yeah.
And he's like, this is wonderful. He goes, now
Yeah.
I get to take this to the CEO of the bank and to the underwriter. And he goes, I just walk right through everything.
Yep.
And I think they asked us for, I don't even know if they asked us for another document.
Yeah.
We had some conditions to clear or whatever, with things that some releases and things like that. But it was an awesome feeling that they just walked, right through everything. And the better you tell your story, and like you said, that you have that relationship with your banker, the better the position that you're in.
Right.
And it gives you a lot of confidence when you are going for a new piece of business, and it's a big piece of business,
Yep.
and you're looking at your projections and you're like, we're our cash flow is going to be negative for 3 months
Yeah.
until we have cash coming in. And you can go to your bank and say, okay, here's this new piece of business, and this
Yeah.
is what we need to do to land it. And the bank wants to be a part of that.
Right.
That's how they're making money. And the better you can tell that story,
Yeah.
the better you are.
I mean, that's
So
everything. I mean,
yeah.
I hear a lot of individuals say, "Well, the banks won't lend to anyone. They'll only lend to people that already have the money, or that don't need the money." Or a lot of people take the entitled approach that the bank should just give them, banks should just give them money for them to run their business. And the reality is, banks, they lend. It's relationship. They want to know
Yep.
you. They want to trust you. They are a business too, and they need to be turn a profit. If they have to understand the risks that they're getting into, um,
Hmm.
and if you build that relationship with them, and you provide, and they trust your numbers, and you can provide them that story and with confidence, you can get a long way, even though your business, the financial, maybe maybe you're not the most profitable business in the world, but if they can trust you, trust your numbers, and you have that relationship, they'll go to bat for you. If you treat a bank as a transaction, and transactional, they're not motivated to want to work with you.
No, I totally agree. And you do want to, tell your story in a way that they feel like their risk is low. I
Yep.
mean, the bank is a risk-free zone.
Right.
They're not, they're not entrepreneurs that are out there taking risk, and they want zero risk. I mean, they're
Right.
risk adverse. They do not want risk.
Yeah.
And if they feel like they're taking a risky, position at all, they're just going to turn it down and move on.
Right.
Um, so very, very, very good points. Um, let's talk about the nonprofit a bit. We Ashley is very involved with a nonprofit in West Liberty called, I believe it's called Blessing Bags, and I forget how many kids that this nonprofit feeds, and it's a wonderful thing that she I believe she started. If she didn't start it, she was definitely um part of the beginning of it. And I do think that there's so many people that work for companies, or companies are involved in it, and they don't talk about it. And quite honestly, we never talk about it. um but I think that it is important, and there is need out there for nonprofits, and I'm glad that you brought that subject up.
Yeah. We're very involved in. We have a vertical team actually specifically dedicated to nonprofits and our nonprofit clients. Obviously, we have a passion for that. The team has a passion for that. They have deep experience in that space. Um,
Hmm.
And the value that we bring to those nonprofits is, and I heard this last week at a conference I was actually at, is that so this is one of the first times in society that people actually trust nonprofits less than they do a for-profit business. Where you think,
Interesting.
everyone thinks, oh well, for-profit, businesses are, they don't treat their people well, and all they care about is making money and all that kind of stuff. Well, the reason behind that lack of trust is because, you know, a lot of individuals say, "Well, I don't trust nonprofits because I don't know where the money's going." They're afraid. They almost equate it to government in some ways, right? Like they're just going to waste the money
Right.
I give them, right? And so that's why that financial credibility is so important. And if you have that financial framework in place where you can show your donors, and if you're getting grants, and the fundraising team can go out, and provide them with clarity on where the funds are going, and confidence in that, in the numbers and in the information, that brings up the trust level of the organization as a whole and creates more success overall in the ability to raise funds to achieve the mission that they have. And so that's a big part of what we do is, give the confidence internally and then externally on behalf of the nonprofit so that they can go to market and go out into the community and show that, hey, we got our act together, we're doing really good things here, and ultimately increase the level of contributions, of donations, of grants that they can get. And so
Yeah.
that's the value, and that's what we're really passionate about.
No, that's great. And there is some diminished trust in nonprofits. I remember a number of years ago, we were contributing to a nonprofit, and uh, I send an email to one of my buddies, and he responds to me, sends me their financials,
Mm-hmm.
and he's like, Dustin, he goes, I would absolutely support you in this, but he goes, just take a look at page at whatever 462,
Yep.
and I pull it up, and I'm like, oh my god, I don't even want to be involved in this now.
Yeah.
And it was pretty wild, the amount of money that was going to the actual nonprofit to help whatever that nonprofit was helping
Yeah.
was a very small percentage,
Yeah.
and a majority of the money was going in like four individuals pocket.
Yeah.
And and that's got to be where that comes from, because the internet's powerful and you can look anything up
Yeah.
these
Well,
days.
that's the thing is,
And
that, yeah, I mean, you can look up the nonprofits file they don't obviously don't pay taxes, but they file an informational tax return called a 990, and all that information is public, right? So you can see in a number of states, it's a $2 million threshold. You're required to have audited financial statements, and a lot of that is public knowledge too. So anyone
right.
can look this stuff up, and if it's um, if the 990s isn't filed timely, or if the audit's not done timely, I mean, that just creates concern among anyone who wants. I mean, it's like, guys, if you can't manage your own financial situation, why do I want to give you more money when I don't even know what you're doing with it? And
Right.
that's why we actually have a lot of clients, because we have come in many cases where they're 2 years behind on their audit, and now they're having challenges with fundraising because
Yeah.
they can't even provide current financials to
Yeah.
people that want to give them money.
Yeah. And there's got to be more of those companies or those nonprofits that are doing good, that are not good at the accounting piece, because
Yeah,
they're so focused on doing good
yeah,
that those are the ones that are probably getting hurt the most, because they don't
yeah,
have you, and they're helping them create that financial stability and that
yeah,
picture where people can look them up. And the nonprofits that are probably more fraudulent are probably on top of it, and they're figuring out how to hide things anyways. um so
yeah,
I don't know, very interesting.
yeah,
So is that, and that's a big piece of your
yeah. We
company, and
Yeah, we're probably about 15 to 20% of our clients are nonprofit focused.
Okay.
Um, as we've been talking, manufacturing is a big manufacturing distribution is a big vertical for us. We have a very strong vertical in the construction industry as well. So we have a lot of general
Okay.
contractors, subcontractors. That's a unique niche when construction and managing and accounting for projects that ongoing projects that they have. So yeah, we have a number of different verticals that we really focus on.
Yeah. And construction's got to be, I mean, that cash flow's got to be crazy tough,
Yeah,
especially, working, big commercial jobs or government jobs where you're getting stretched out 90, 120 days
yep,
before you're getting paid and, you know, different vendors going out of business. I mean, that's got
yeah,
to be very, very hard to
yeah. And the
manage cash
margins are
flow.
so thin, right? I mean,
Right.
you do $100 million. If you're $100 million general contractor, I mean, your bottom line is, might only be a few million. That's $100
Hmm.
million of activity you have to manage to turn a 2 to 3% bottom line. And so that's the and so then it's a lot of paperwork you're pushing. As a general contractor, you're now in
Hmm.
charge of bringing on the subs and um, pulling together the managing and driving the overall expense, the expense of the overall project. So there's a lot of work there that's to be had. And with such thin margins, it's okay. How do we identify? How can we drive an extra percentage point? How can we drive an extra 2 percentage points on the overall business and to ultimately maximize that profitability?
Sure. And yeah, there's 1,000 things going through my head with the construction industry of all the challenges
Right.
and it's so necessary, for our economy and
Yeah.
we you can drive down 71 and here in Ohio and um, Honda's putting in a, a mega factory. I mean, it's millions of square feet, and I can't even imagine how many different contractors and subcontractors
Mhm.
are on that job. Same thing with Intel.
Yeah.
Intel is investing $100 billion in a facility, mega facility here in Central Ohio, and it's you look at all those vendors
Yeah.
and it's wild to
Yeah.
to think of all that.
Yeah, and they're also they are hit the hardest, and they are the most cyclical as it relates to the economy too, right? So
Mm,
when one of the first things that slows down is the construction, right? When the economy
yep.
starts to slow down, so they start to see that now. Sometimes though they're at the tail a little bit because they have a backlog, and so the economy might slow down, and then 6 months later, then bottom falls out for them. Um,
Sure.
so, but in the same way, they might be at the forefront of when the economy is doing well, right? So you can always
Yep.
kind of see when construction is picking up or slowing down, it usually is directly correlated to the economy.
Yeah. Well, in colder states, I know you guys don't deal with it in Southern California or even middle, parts of Northern California. The weather is,
Yeah,
could affect you massively, and we see that in Ohio, certainly up in Michigan and in a lot of the northern states. You could just be completely shut down because of the weather. I worked for a concrete contractor, right out of school, and there were years that the ground froze so damn hard we couldn't dig.
yeah,
And, we're out there trying to, use ice rippers and all that where, we were, uh, we did a lot of residential basements and commercial basements, but, a basement that would take half a day
yeah,
for us to dig, it might take a week because
yeah,
you're just trying to chisel through the ice.
yep,
I mean, it's almost like, well, why are we doing this? Why don't we just shut down, save the money on the diesel that we're, burning 10 times more
yeah,
and, go back at it when the ground thaws out.
yep,
And, then you're laying people off and things like that, nobody ever wants to do. But
right,
yeah, that's an interesting one.
yeah,
Um, what next? Uh, oh yeah, closing month end out. Yeah.
Yep.
Um, it, I would, and you're going to tell us all this, but I would think that the really important part is just being on top of your books and getting everything entered, live and
Yeah.
not, doing everything the last 2 days of the month.
Yeah, so there's a couple parts when you talk about accounting. So you have the day-to-day transactions. So you have, got to pay bills, you got to invoice, right? You got to collect
Yep.
cash. Um, Hopefully if you're staying on top of that, that's a big part of it. So, hopefully you're not just paying bills and then entering it like in the system later. And when you receive the cash, hopefully it's being applied against the invoice. You really want timeliness. You want real time information on AP and AR at a minimum, right? Because
Mm-hmm.
that's how you're making decisions on cash flow in a lot of cases. That's how you're making decisions on who you're paying. Want to make sure you're up to date on your invoicing because that impacts cash flow. So you want to be invoicing ASAP right at the whenever that invoice period is, because every day that it gets delayed is a delay in the cash. So if you really want to improve your cash flows, if you're late on invoicing, speed that up by a week, and all of a sudden your cash flow is going to improve drastically. So that's one. So make sure that the day-to-day activities are being entered, as you just mentioned. Then on a monthly basis, there's a process where it's a close, the monthly close process. Usually, hopefully, you have some sort of a checklist, and there's consistency on how it's done, and there should be expectations with your accounting team on when you should get monthly financial statements. If you're not getting financials within 30 days, I mean that's the bare minimum latest you ever want to see it. If you've gone into the second month, so if we're in May and you haven't gotten financials by the end of June, that's a problem because you now you're getting if you are getting them, it's late. You can't. You're getting old data. You can't manage your business that way, and you can't trust it. Best, I would say the what I would consider to be kind of the standard would be at minimum by 15 days after month end, you're getting financial statements. At a minimum, you're getting at least draft financials so you can see what's happening, but you should be getting closed financial statements. And again, it's not necessarily a printout from QuickBooks either. Ideally, you're getting a financial reporting package so you can dig into different aspects of your business. You can see what cash flows look like as you move forward. What are your cash flow projections? You can see your profitability by product line and by the different products that you're selling. So you can dig into that a little bit deeper, and that allows you to make decisions on, okay, hey, how do we become more profitable in these areas? Okay, hey, this product is more profitable, so how do we incentivize selling this product more over this other product that's less profitable? Being able to evaluate your expense structure is important. So that process to close the books really does take the sophistication of somebody probably above a bookkeeper in most cases, especially with manufacturing above a bookkeeper level.
Yeah.
It is actually a more robust process to ensure that things are reconciled and you have supporting documentation for everything, every account on a monthly basis. If you're required to have, if you have financing and the bank requires reviewed financials or audited financials, if you are properly closing the books every single month, by the time you close out the year and then ultimately get to the point where you have to have work with the auditors for the audit or review, 90% of the work is done because the schedules and the supporting schedules that they're asking, those are standard schedules that should be done every single month to close the books. So you have them, you're done, boom, here you go. And the remaining 10 or 15% is just the standard audit related stuff that they do, and questions and what to pull support and all that kind of stuff. But the challenges we see a lot of times is that's not done at all during the year. And then they have to have reviewed financials or audited financials. And now they're scrambling, they're trying to put stuff together. It's not accurate because it's never been accurate. And the audit extends out and the bank gets upset and all these things happen. So if that's happening, you probably aren't getting good financials timely, accurately. They're not relevant to you as well. And you probably don't have a team that is sophisticated enough to be able to do that. And the real value of that, of financials, is to be able to use it to make decisions to achieve the goals that you have moving forward. And if you don't have that at the time, as you grow, you're just, you're going to end up getting stuck in that hamster wheel of just not having good information.
So is this where your team steps in, or where
Yeah,
what you're adding value to your
absolutely. Yeah.
customers is you do that heavy lifting?
Yeah. So a lot of times the client will have a bookkeeper, does the day-to-day stuff. We come in, we support the bookkeeper, make sure that what they're doing is sufficient. There's the right oversight on them. So there's that fraud. We talked about the bookkeeper stealing, right? Well, now we're there. They can't
Mm-hmm.
steal because we understand what they're doing, and we have our eyes on things. And then the other is we bring that we'll support and drive that close process. And so a lot of what we'll do is we'll define roles and responsibilities. The bookkeeper, the internal resource they have, can probably do a lot of things. They can reconcile the bank accounts, they can reconcile the credit cards. But when it comes to more sophisticated things like, really finalizing and closing the books, and booking the, any accruals, making sure that revenue is recognized appropriately, making sure that we understand the margins and by product line and all those things are recorded effectively. That's more sophistication than a bookkeeper will provide. And so we have a team. We'll do that. We'll make sure that we work and position the financials in a way and the reporting so that the business owner, the executive team is getting good data, good information. And then we'll walk through it with them and say, hey, this is what we're seeing. Here's the trends of what's happening. Have you considered this? What's happening here? What are you trying to accomplish? Let's talk about that. And let's talk about what that means moving forward as well.
Right. That's great. I would think that a lot of small companies are relying on their tax accountant
Yeah.
to do those things or to close their books out
Yep.
on a monthly basis if they don't have a controller or an accountant on staff.
Yeah. And the reality is, that's not what the tax CPA wants to be doing. They want to be doing the tax work, right? They don't want to be
Right.
doing the cleaning up the books. Like that's not really what they want to be doing. And they're not in there every day. They're not there. They do it once a quarter. They do it at the end of the year, and so you're not getting value out of that. You're not getting good information. And where we come in is say we're part of your team. We just don't happen to be there every day, but we're there. We're working with you on a fluid relationship, daily, weekly, monthly, making sure that you have that oversight and that leadership to take your business to that next level.
Right. No, it is so important, and even we've found that having a good bookkeeper is very difficult to find.
Yep.
And we found that if somebody thinks that they know how to do bookkeeping, and if whether they really do or not are two
Yeah.
drastically different things.
Right.
And even companies out there that um, are bookkeeping companies still aren't doing bookkeeping correctly.
Right.
We have found, and there's some monster companies out there that that do the same thing, and you have the same issues with it. And it's
Yeah.
been one of the the bigger thorns in my ass over the years of building my company is the bookkeeping and understanding it. And it's
Yeah.
definitely not something I'm strong at. I don't
Yeah.
even want to be strong at it.
Yeah, and
Um,
I honestly use bookkeeping as almost a bad word, right? Like that's your lowest
yeah,
level of sophistication. That's somebody who can enter, do the data entry, and do basic, bank
yeah,
recs and stuff like that. But beyond that, you're probably not getting, especially manufacturing. A bookkeeper will not have the sophistication or the skill to be able to really give you good insight and good information on your business.
yeah.
And that's where you
Well, and
need somebody higher level.
yeah, and we found it's even tough to get somebody just to categorize something properly.
Yeah, and
I'll
that's the
go.
basics.
There's been years that I'll go through through our P&L each month, and I'm like, why is this in there, and why is that here, and
Yeah,
I'm going through, and then I'm digging in, and it just blows my
yeah.
mind that I don't know if it's laziness or it's ignorance or
It's a lack of
what the
process.
true.
It's both. It's lack of process by whoever's doing it or the firm that has that person out there. And it's lack of experience and sophistication, right? Well, put it where I think it goes and I'll move on, right? They don't truly
Yeah.
understand that that's not appropriate for you to run your business
Yeah.
and to have good data. You can't have that, right?
Yeah.
And
And,
it's just lack
and
of
yeah.
sophistication.
Yeah, and it can affect you. Maybe not hugely, but just the difference in how meals are entered,
Yeah,
and the tax implications of how you or how much you can write off a meal, and if it's
right.
if you're buying it for your team and they're working versus taking a customer out, and if it's all lumped into one bucket, it's maybe not the biggest problem you have, but it's
Yeah,
definitely one of maybe 50,
yeah,
and it can definitely affect just tax returns, and that certainly affects cash flow if you're paying more in taxes that
yeah.
than what you should be, and
Yeah,
things
and
like that.
actually,
So
the best case with I see this a lot with manufacturing companies is significantly overpaying taxes because they don't have a handle. And we talked about inventory before being a black hole. If your inventory is not accurate, if your inventory is overstated, meaning your books show you have more inventory than you actually have on the
right.
shelf, that means that your cost of goods sold is understated, meaning you're showing less expense than you should be showing on your books. That means you're showing more profitability than you actually had, and therefore you're now paying taxes on that profitability that you never really had, right? So
Right.
if
Yeah.
you if inventory is not if you don't have your hands around inventory, it directly impacts the profitability of your business one way or the other. In a lot of cases, we see businesses paying taxes when on phantom profits because they haven't done their accounting correctly, and that is significant. That's cash you don't want to be paying.
Oh yeah. I don't want to pay taxes, period,
Right,
let alone taxes that I don't owe.
right,
And and that's I don't it just it almost it makes me all jittery
right.
even
Yeah,
even thinking about phantom tax. That's going to haunt me.
yeah,
Phantom taxes.
yeah.
Uh
So I would say,
yeah.
at a minimum, do an inventory count at the end of the year, true up your inventory to what it should be,
Yeah.
and the difference, uh, the other, if you're from an accounting perspective, that difference it hits inventory and then it hit cost of goods sold, right? And that'll
Yep.
at least give you some peace of mind. If nothing else, just do an inventory count at the end of each year.
Yeah. Yeah, fortunately I think Ashley's on it, and I bet our inventory is spot on.
Yeah,
If it's out of control by 1%, I would be surprised.
yeah,
And
that's good.
maybe I'm too confident
Yeah, yeah,
in that, but I really do think that she does a great job with that, and
yeah,
so kudos to her. That gives me a better feeling, but I couldn't. And if I'm wrong and we're paying phantom taxes, then we got a problem.
yeah, yeah.
So maybe you'll do an audit on us, and you'll find some
Right,
big
right.
issues. I don't know, but yeah, and then I that really rolls right into the efficiency accounting process, and
Hmm.
are you really profitable,
Yeah,
and if your inventory is out of control and you think you're profitable and you're not,
right.
um, or you're not collecting your AR
Yeah.
like you think you might be, um, very very challenging things.
Yeah, I mean, you can't honestly know if you're profitable without good numbers, right? You can kind of say,
Right.
well, I think it cost me this to buy the product, and then it cost me X, X to buy the product, cost me Y to sell the product. Okay, here's how profitable I am. To your point, a lot of times labor is not taken into consideration there, overhead's not taken into consideration, and so how do you really know how profitable you are unless you're getting your numbers consistently every month? And if you're not, you can't make good decisions to improve that profitability, or even survive, or even be prepared for anything that may or may not come up. And so that's a to me, obviously I'm a finance guy. It would be very, very scary if I had no understanding of what my numbers look like. Um, I wouldn't be able to sleep at night,
Yeah.
because it's just that critical. Now, how do you produce good numbers? How do you know your numbers are accurate? Is you have to have a process. You have to have a process to close the books, and you have to have that But we talked about that higher skill set individual as part of that process to do that. To close your books effectively, every single account on the balance sheet needs to be reconciled. What is also a misunderstanding is that, I hear some people say, well, I just look at the P&L, or I just look at the income statement. I don't really look at the balance sheet, or I don't understand the balance sheet. But the reality is, if the balance sheet is not accurate, there's a 100% chance that the income statement or the P&L is not accurate, because they relate to each other. When one thing hits the balance sheet, when something happens on the balance sheet, it impacts the P&L in a certain way as well. So if you have balance sheet accounts that have not been reconciled for, in some cases, months or years, that is, there's inaccuracies on the income statement and the P&L as well as a result of that. Now, some of those inaccuracies may have resulted from years ago and need to be cleared out, but those balance sheet accounts need to be reconciled every single month. Yeah. When you, from an accounting perspective, I don't want to get too granular here. When you reconcile the balance sheet accounts, you then ultimately have confidence. Everything flows through into the P&L, and you have confidence that you have accuracy there. Then it becomes a classification thing, as we talked about before. So, are your expenses classified effectively? Are they being recorded in the proper accounts? Cost of goods sold, and ultimately your sales and G&A, sure, general administrative costs and expenses. So, that process, you have to have consistency in that to really truly understand, so you can compare month over month as well. How profitable am I? And am I consistent? And knowing your margins, and your margins on your product should be pretty consistent by product line, so that, if you're doing it the right way.
Sure. Well, I think we could talk all day about this. Again, it's something that I'm passionate about, and I nerd out over. Definitely, it's a constant learning, and I've gotten a ton out of it just listening, talking to you, and hopefully everyone else does. If somebody wants to get a hold of you, we'll put this in the description. It'll be on our website, on our blog, things like that. But how does somebody get a hold of you if they want to chat?
Sure. I mean, our website's pretty easy, signatureanalytics.com. I can also be reached directly over email, the letter J, Kruger, that's J, and that's Kruger, at signatureanalytics.com. Are probably the two easiest, is what I would recommend. LinkedIn, you can find me on LinkedIn, reach out that way. I always love talking to business owners. We'd be happy to help or point you in the direction or introduce you to someone that can help.
Yeah, awesome. Well, I really appreciate you reaching out to us and coming on the show. It's been fun. I mean, not many people are going to say accounting's fun, but I do. I think it has been fun, and it's such an important piece of your business. And you could have a hell of a company, and it could fall apart because you don't understand this stuff. So,
right.
Definitely very, very important. Man, thanks for coming on. And maybe if somebody wants to hear a very specific subject that might be fun to talk about, certainly email us at info@mfgmonkey.com and ask us to talk about it. Maybe we can get you back on and talk about another subject that somebody's like, hey, I'd really like to hear about this or whatnot.
Sure.
I think that'd be fun as well.
Yeah, absolutely.
Thanks everyone for joining us for this episode of MFG Monkey. If you have any questions or suggestions for future episodes, please email them to us at info@mfgmonkey.com.